Welcome to Subramani. I'm going to do a state of the market address kind of a thing, right? Which normally ministers do. I'm going to tell you what I think is happening in this market and where am I investing. This has nothing to do with what you should be doing, and I'm going to name some companies too. It doesn't mean you should do the same. I've been doing investing in these companies for maybe 10 years. So my portfolio will look very different from yours. So if I buy Indigo today at 6,000 rupees or thereabouts, it doesn't matter. I started buying at 800. I'm still buying maybe just a fixed amount every month. So maybe I'm buying 5 shares, 7 shares, 8 shares every month, because that's what I'm now allowed to put because of my overall limit as to how much I want to invest in one company. So markets are today I'm shooting this in October 2025. Markets are not as high as it was 15 months ago, in the sense that a lot of earnings catch up would have happened. Last 15-month return in the equity market should be about 1%. I remember some time back seeing that it was minus 1% is what it had happened, but slightly market has gone up, so maybe the returns are about 1%. So you could call this, it's not a correct English word, but we use it very regularly. It's a time correction. Market has done some kind of time correction, so the markets are not as highly priced. I'm not even saying markets are at mouth-watering levels, but markets are not very highly priced. Where am I putting my money? Basically large cap and flexi cap funds, because many of the flexi cap funds have a large cap bias. So these are the two places. This is core to my portfolio, so I'm putting it there. Mostly old portfolios like mine would have a large cap bias. So I have a large cap bias, though of course I do SIPs in small and mid cap too. So then large and mid also, I have done some investments in large and mid cap because I like that fund manager. So I'm not naming him or her. Again, like I said, my core funds are today multi-asset and BAF, balance advantage fund, because that's the best way to enter debt market tax efficiently. I did sell October 25. Towards the end of October 25, I did sell some gold and some silver. After I have sold silver, it has not gone up, but by the time you see this, it would have gone up another 5-10%. Maybe. I'm sure there is more left in gold and silver, but for me, gold and silver are not asset classes in which I think I'm going to make too much money. I am making good money in the sovereign gold bonds. I am making good money in some gold fund, World Gold Fund. I've made money in Deccan Gold, which is a gold mining company. But am I going to make money in gold as a commodity over a 5-10 year period? No. Last 3-4 years have been just too benign for this commodity. Internationally, a lot of central banks have been buying. It's very difficult to say whether central banks have been buying gold, or you look at it and say they're actually dumping the dollar. Both these are possible. I still have some exposure to gold and silver, but through my multi-asset funds also. So that itself, that could be quite substantial. My contrarian bet is IT. I like HCL, I like TCS, I like Infosys, but my preferred choice is HCL. My SIP on HDFC Bank, on Nippon AMC, on Indigo, Zomato, Sun Pharma, JSW, just been continuing for a long time, and that will continue. Nothing changes. There are many others, but this is top of mind recall. I also have to warn you that don't look at 5-year returns. 2020 was a particularly bad year, so 5-year returns can look fantastic, whereas your 4-year returns or your 6-year returns will be more realistic. 12% if you have got in your equity funds over a long period of time. When I say long period of time, I mean 15 years kind of a thing. You would have done fantastic wealth creation. If you have got better return than than that, great, but even 12% has not been bad, because 12% what the market would have given you. Of course, funds like HDFC Flexi Cap, IPO Discovery, and some of those funds in which I have also invested may have given better returns or may not have given better returns, but that your expectation should be reduced. Don't base your expectation based on the last 3-4 years, 5 years kind of return, because 2020 was a particularly bad year. Increasing income for the people, and automobile prices not going up too much means that the market is ready for bigger cars. So I do look at some of the auto numbers and they look attractive, because not because the industry itself is booming, but the fact is people are buying higher value cars than the lower value cars. Higher value cars are selling more than lower value cars. IPO markets are in good shape, but I do think almost all IPOs are overpriced simply because of the fees that they are paying. 5% of the IPO proceeds as fees, 6% as fees, is simply because when a promoter goes to a investment banker and says, I want to do the issue at 100 rupees and I'll pay you 2% fees, they just say, no, you do the IPO at 200 and give me 5% fees, which is good. Everybody is feeling good, and the retail Indian investor is very happily giving exit to expensive promoter exits and to VCs and FIIs, etc. But that's a fact. The fact is it is happening. So what are the advantages? I think everybody looks around and says, oh, India will grow at 7%, 7.5%, whatever. So but one thing is sure, all these increasing incomes for the lower, for the starting level, I'm just doing a video on number of companies paying 30 lakhs as starting salary. That's not small. So when a person is earning 30 lakhs, is he going to buy an Indigo, or is he going to buy a Honda City? It's very easy that the sedan and the SUVs will sell more than the smaller cars as the country's income keeps increasing. So to me, auto looks attractive. Housing finance doesn't look too bad. Gold and silver is just some crazy American or international scenario because of which gold and silver are going up. I don't know. I don't treat it as a great commodity to make money. And that's it. So my view on the market is continue your SIPs. Markets are not at mouth-watering levels, but they're not as expensive as it was, say, 15 months back. Thank you.